Welcome to the CoreLogic Economic Outlook for February 2017. The erosion of homeownership has been one legacy of the housing boom and bust of the last decade. The homeownership rate peaked at 69% in 2004, inflated by relatively easy mortgage credit primarily provided by subprime and low-no-doc loan products. The drop in homeownership continued through 2016, with a homeowner rate just a tad above 63%, the lowest annual average in more than 50 years. But we may be at or near the bottom of the homeowner decline. Analysis of our foreclosure and short sale data has found that more than 10 million homeowners lost their homes through completed foreclosures or short sales since 2006. Given that the number of households in 2006 was about 115 million, that would represent about 9% of households. Completed foreclosures have dropped significantly since the trough in the housing market, with annual totals falling 21% just in the past year. Household income growth, home price gains, and loan modification programs have reduced foreclosures. Another 20% fall in completed foreclosures during 2017 would bring foreclosures below the 2006 level, lessening the downward tug on homeownership. Demographics have been another cause of the dip in homeownership as the large millennial cohort has formed households and entered the rental market. But this age-related drag on aggregate homeownership may be largely behind us, as an increasing number of millennial households enter their 30s, the typical age of first-time ownership. Nonetheless, there are at least two trends that may continue to exert a downward pull on homeownership. First, minority-headed households are projected to account for nearly 3/4 of net new households formed over the next decade, and these households have historically had lower home ownership rates. Second, there is a smaller mortgage credit box today compared with 15 to 20 years ago, which reflects the nexus of cautious underwriting and discouraged would-be buyers who have variable income or marginal credit scores. Overall, the decline in foreclosures and distressed sales, aging of the millennial cohort, and projections of economic growth suggest that the home ownership rate may be at or near the bottom of its 12-year decline. However, unless minority-headed households are able to increase their ownership rate, it's unlikely that there will be any substantive increase in the home ownership rate. Thanks for your time. For more on CoreLogic's perspective on the U.S. housing economy, please visit the Insights area of CoreLogic.com.